This year saw one of the best ever starts to the Dubai real estate market, with record-breaking sales on an almost weekly basis, and in Q2 we continue to see record results. A powerful combination of soaring tourism and post-COVID economic recovery, a hugely successful expo, not to mention major upheaval and uncertainty in Europe, means Dubai is more appealing than ever. At Haus, we keep a close eye on market statistics from reputable sources like Property Monitor. But our most key insights tend to come from what our extensive team of property consultants are seeing on the ground, so to speak. Across our sales, leasing and commercial departments, here's a snapshot of some of our thoughts about the Dubai property market in Q2.
With nearly 6,500 properties transferred in Q2, as per Property Monitor, Dubai has shown strong growth for both apartments and villas across the quarter. Buyer registrations are continuing to outweigh sellers in the market, so we have noticed that properties vacant on transfer have been selling extremely well throughout the quarter. It is interesting to note that 4 out of the 6 villa and townhouse communities across Dubai that have transferred in Q2 are all Emaar developed. These include Emirates Living, Dubai Hills Estate and Arabian Ranches 1 and 2. Emaar have certainly learned how to create communities with the right facilities and maintenance upkeep to help them thrive over the long term for its investors. When it comes to apartments, the top sales communities have been Dubai Marina, at no surprise, Business Bay and JVC. Business Bay continuing to be popular due to its location and price per square foot, and JVC with its new up-and-coming developments popping around the community. With mortgage rates rising to the back end of the quarter, we're seeing lots of buyers rush to market to secure the best rate they can on a fixed-term mortgage. Overall in Q2, Dubai continues to show positivity towards long-term investment and economic stability.
So the leasing market in Dubai continues to be heavily impacted by the positive sentiment in the Dubai sales market. And what we mean by this is that the rise in sales prices has caused a lot more landlords to consider selling their properties and having served notice to their tenants to vacate in order to make it easier to fulfill that sale. So now, when we're speaking to our tenants who are now needing to move after being served notice, is that they're often having to find properties that are more expensive than where they're currently living and maybe even smaller in size, maybe lacking the upgrades in their property that they once had, as well as maybe such as not having a private pool anymore. For instance, we were speaking to a tenant the other day in Arabian Ranches who is paying 300,000 dirhams for a 5-bedroom property with a private pool, who now can only find for the equivalent budget a 4-bedroom property with no private pool. Naturally, it's quite hard to manage these expectations as brokers. There is also a flip side to this. There's many landlords who rented their properties in the height of COVID, who may have even given out the goodness of their heart rent reductions or naturally had to adhere to the low market conditions, who are now achieving a significantly lower rent compared to what the current market conditions are. However, due to the restrictions put in place on the amount that you can increase your rent, as per the Rear Rental Index calculator, it means they cannot raise their rent to the current market conditions. This means that many landlords now feeling that they're suffering in terms of not being able to match the current rate. As per the RERA laws, the landlords are not able to evict their tenants at the end of the tenancy contract. This is due to them having to still serve the 12-month notice to get vacant possession of the property. So what we're finding is that landlords are opting to sell the property as they feel they're unable to achieve the current rental price anytime soon. So to support these points, I had a look at a couple of the core communities that we're market leaders in, just to see what the average rental prices have been doing over the last quarter and last year. So looking at Jumeirah Park and Jumeirah Golf Estates, both of them had seen a 22% increase in rental prices in the last 12 months and 7% in the last quarter. This is pretty much the same across all of the major communities that we're operating, a positive market trend in prices, which is great for landlords, but naturally more expensive for the tenants. And specifically looking at Q2, what we found is that April and May were in most communities the highest average rental price in recent years. So not surprisingly, we continue to see the affordable living communities in Dubai being popular as ever. This is with tenants wanting to keep their rents as low as possible, as well as potentially tenants being priced out of areas they were previously living in, now moving towards these more affordable living communities. We've seen an increase in the number of transactions we're doing in areas such as Town Square, Emirate and Mira Oasis, which are very popular among Dubai residents. In Q2 this year, we've seen a real increase in some of the apartment communities, such as the apartments in Dubai Hills Estate, as well as Dubai Creek Harbour. Compared to this time last year, where there wasn't many of the buildings completed, lack of amenities, almost feeling like that ghost town feel, this year sees completion of many buildings in the area, as well as amenities such as malls and hotels, which is naturally attracting more and more residents to the area. So my advice to both landlords and tenants, especially if you're approaching the end of your tenancy contract, is to get in touch with your broker of choice to get the market insights to help you make the best informed decision how to move forward with the renewal. Of course, we're always happy to help.
The first quarter for short-term rentals here in Dubai was probably the most successful. We hit around 89% occupancy, and that was mainly due to the Expo and of course Dubai being one of the top travel destinations in the world. It's been great to see this momentum carry through quarter two. Our landlords are achieving around 20% more than a long-term lease now. As travelling becomes less restricted, we will definitely see a lot more holidaymakers and travellers throughout the rest of this year. The World Cup will also make its debut in November this year. It will bring around 1.5 million visitors, which will significantly boost short-term rentals for us. Our best performing properties are still those in the most tourist areas like Marina, Palm Jumeirah, downtown Dubai, DIFC, Business Bay, and of course Palm Jumeirah. We're also seeing new areas become popular like Dubai Creek and Port de la Mer. New development Emirate beachfront is a hot tip for investors this year, with its modern apartments overlooking the Arabian Sea.
Demand for Dubai off-plan is currently outstripping supply as the emirate becomes increasingly attractive due to ongoing instability across Europe. Emaar continues to dominate with their broad range of quality developments, the Emaar beachfront being especially popular. The new address development being sold out in literally minutes with tens of thousands of buyers all vying for the 400 units available. Investors need to ensure they're registered with the top brokers to make sure they have access to the latest launches and the best offers. Damac has also been selling well in quarter two with their recent Damac Lagoons project. Villas and townhouses at very attractive price points have been bringing in both end users and investors alike. Downtown Business Bay and Dubai Creek Harbour projects are very popular with our clients due to their central locations and future amenities, which is reflected in the numbers we see from Property Monitor, as these three areas make up the top 3 off-plan sales locations in Q2. Despite all this demand and the frantic sales happening, it's really refreshing to see the big government developers holding steady on prices and holding the reins in, if you like. They're making sure that what happened previously in the market with price escalation going too fast doesn't happen again, helping with stability in the market and ensuring that off-plan purchases are an attractive, stable option for long-term investors.
Demand for commercial real estate is increasing in Dubai. We can see a big interest from people all over the world for the properties like retail spaces, warehouses, offices, as well as malls. Well, for example, recently there was an introduction of a new area in industrial real estate. Jabza have introduced a new Chinese market with retail spaces and warehouses. We have an increase of interest in e-commerce, where there is a new free zone came on market under the name of Dubai Commerce City. The demand for the offices is high as well on certain areas like Business Bay, Jumeirah Lake Towers, downtown, DIFC and Sheikh Zayed. The number of properties in commercial real estate is not that big as in residential. However, the new developers in residential areas, taking into consideration the demand for the retail spaces and constructing in all residential communities, community malls and street retails for the comfort of the people who live in that areas. In general, we think that commercial real estate in Dubai is keeping the demand, and it will keep in the same path because the number of businesses coming to the country is increasing. The number of people who are interested to open the businesses is increasing. Hence, the commercial real estate in Dubai will be on demand always.